This is Omar Nashashibi in Washington, D.C. with an update on the U.S.-China tariffs and U.S. Trade Representative's review process. On August 24th, word came out of the Office of the U.S. Trade Representative that the Biden administration is officially conducting its comprehensive review of U.S.-China trade policy. We are now 7 months into President Biden's term in office, and the timeline is consistent with what we have been hearing. USTR is unlikely to complete its review prior to its soft target date of December 31st, 2021. Throughout the spring, the USTR said it had yet to begin its review of the policy towards China on trade that as of now resembles that of the previous administration, with tariffs still in place on thousands of items. Former President Trump imposed 7.5% and 25% tariffs on over 5,000 goods imported from China into the United States. In 2020, Washington and Beijing reached an agreement under which China would increase its purchases of goods from the United States. That agreement is coming under increased scrutiny here in Washington, D.C., and around the manufacturing community at large, as through June 2021, China has only purchased 64% of the covered goods levels under their purchase agreement that was committed to of $84.1 billion through June 2021. The total target of Chinese purchases for the entire calendar year is $193.3 billion. Specific to manufacturing, however, U.S. goods purchased by China sit only also at that 64% level, a current rate of $32.6 billion, still below where they're supposed to be through June 2021. As the Biden administration continues its review, not only are the goods and the U.S. exports are a focus, but also the items imported into the United States that are still subject to tariffs. Sources continue to indicate that the USTR views the tariff exclusion process as part of their overall comprehensive review and that the process itself serves as a strategic purpose. The previous administration created a process by which U.S. importers can seek an exclusion from paying the 25 or 7.5% tariffs, and that process, though, is currently closed. Companies were able to petition the U.S. government, which would then post that request online. That request would be to not pay those tariffs for a one-year term. The public could also weigh in on that. But again, we do not have an indication of when the U.S. Trade Representative's Office might restart that process, and thousands of companies are anxiously waiting what that might process look like if they do in fact reopen it. Our understanding remains that the USTR is hesitant to take a piecemeal action to addressing China trade policy, and this has caught the exclusion process as part of that, where again, they view the exclusion process itself as part of the strategic exercise and review. We do know that the U.S. is actively speaking with allies on a broader China policy ahead of the G20 meetings coming up at the end of October. Vice President Harris traveled recently to Southeast Asia, meeting with officials in Vietnam, which is seen as an important component of a longer U.S.-China strategy. We have heard as a result of those meetings in Vietnam with the Vice President that country has agreed to lower tariffs on U.S. pork, wheat, and corn, but we continue to see little movement here in Washington on the China tariff front. And again, that still withdraws a lot of attention of many U.S. senators and hundreds of companies that have recently been pushing the Congress to act. It is an important development, however, that the USTR has officially said that they are undertaking the comprehensive review of trade policy towards China. Many manufacturers and distributors believe Washington cannot move fast enough, but the Biden administration appears steadfast to stay their course and continue the review through the end of the year. With the last of the tariff exclusions expiring at the end of September, many COVID-related of those are which are still under that list, we will see if USTR provides further indication of their next steps in the coming weeks. We'll continue to keep you posted from here in Washington, D.C. on China and other trade developments.